their game too. But that really to me bears some watching.
Yeah, look at it. After an that's a semi-annual.
Mhm.
Let's go to an annual. Yeah, I like the fact that it's higher on a semi-annual here.
Well, I'm telling you why I've been watching it. So.
I mean, that's a really good spot, and there's a lot of room in that to come back up. It's massively oversold. It's been trading oversold for 10 years.
So, in my view, in the same line of thinking, Ira, is that silver ultimately probably will way outperform gold, and that move in platinum would be indicative of the beginning of that. I think it would tell you it's going to happen. So silver is a very liquid, easy thing to own, and the miners are a good play on it.
Yeah, you know what? And again, they're laggards, and I still think that the ag stocks are good too. I did a lot of reading. There's a piece. In fact, I've started talking to him. I had a long conversation with him this morning. A guy who writes for Forbes. Hold on, let me find the piece, Judd. Hold on. Keep that one, Brian. Let's see, Brian. Let's see what you got. He did a nice piece. These guys are making.
And I'll tell you, I love this platinum yen on a weekly.
Yeah, that's probably the right spread to watch too.
Yeah,
his name is Brian. His name is Brian Rich. I'll send you the article he wrote for Forbes a while ago, but it's worth taking a look at.
Yeah.
Had a long talk with him this morning. He's a good friend of somebody we both know. She was one of the great ones.
Andrew, the kid that was from one of Howard's guys, Perry.
Who? Andrew Perry? Yeah, I like Andrew Perry.
Yeah, he signed up. He hasn't been in today, but
I haven't talked to him in ages. Bright guy. I like
yeah,
him.
he signed up last night. He finally got a CQG set up, and I don't know. He signed up, so that was nice.
Yeah, good. I'm not writing, but if I get back to writing, but I'm trying to do more of these. This guy who I just sent you that article, you should reach out and see if you could, tell him who you are. Because he's actually done some of this before, so he's worth talking to. So
I wanted to introduce a idea to everybody that I've been looking at for a long time and waiting for the setup, and I think it's happened.
Okay.
Well, this is the idea. I think I think gold and the metals are kind of like they were in 05, and they've got some years ahead of them, and that means you're looking at 300 to 500% gain or more. Who knows? Ill-defined what the upside is, but it's really big. So that's part of the idea, and I think we all can agree that the dead hole that we're in and the no growth hole and all the crazy shit they're going to do is the only thing that makes the only antidote is gold and commodities. But right now is the time to buy beat up levered gold mining assets, because levered assets they blow up on the downside of the cycle, but they make huge money on the upside of a cycle. And this is a cycle which I think I think from these price levels is just starting to lift off. So,
That's
and I'll
a,
give
that's
you the name.
Pete.
I'll give you, I'll give you the name of a company that I've been following for a long time. It's called First Mining Gold, FFMGF, and it's been developing properties in Canada that they bought dirt cheap from busted development companies.
Yeah.
So it's FFMGF, and they just they've they have multiple interests now, and they have a premier property which they're just stripping out, they're just finishing addressing all the environmental issues in Ontario. And it's like a really big property. It has like 4 million ounces of gold on it. And there just aren't many properties like that in the world anymore. So, so anyway, I think that stock is going to be a 10, 20 fold appreciation on it, but over 3 to 5 years. So,
Listen, I think your point is very, very well taken. And as you know, I talk to intelligent people. Gotta start building out, and again, it's not that I believe that gold is an inflation hedge. Yeah, ultimately, but by then it's late. It's of course, as I've maintained for more years than for decades, right? It's really a hedge against central bank malfeasance and lack of credibility. And I think we're on the verge of that. I don't care what Wall Street says, because Wall Street is going to applaud liquidity ads, because you know what? It makes their life easy. So,
yeah. So anyway, the core idea there is to make really, really big money on this kind of baked in the cake situation, is to buy levered assets that at this point in the cycle, this is when you buy them. You don't buy them at the top. You don't buy them halfway down. You buy them now. That's my point.
Yeah, and it's an aggressive play, but it all depends how aggressive you want to be. Me, I look for, and I understand. Listen, leverage when the markets are going your way, leverage is the greatest thing in the world. But when they turn on you, you don't have to look any further than 2007, 2008. Leverage was great until it became your enemy, and then it becomes a heavy burden to carry. But your point is, well, we are at the beginning. Listen, just put up a Bloomberg commodity index chart if you want to see how early you are. So to make your point.
And that's going today, big time.
Well, it really, that chart is really starting to look interesting, isn't it?
Yeah, and when you
I would say go way out on that chart. Like go.
When you go to a weekly, it's beautiful, because now it's.
But I wanted to compare it to like really long cycle, like if you go back to.
Okay, well here
15,
we go.
20 years,
Well,
yeah.
this one only goes back to 91.
Okay, well that's proves that this shows the point, because these are long cycles.
Yeah. So look at that. So you look, and people would be amazed. Look at when the all-time high was made. Look at when the all-time high was made.
Oh wait.
July of 08. Huh.
Yeah. Right before the great unwinding of all the leverage in the system. But let's go back to the original platinum call, right? Go ahead, overlay the platinum with that.
Hold on. You want the Bloomberg commodity indices first?
Yeah, I don't care.
Hold on, I gotta change the input. All right, give that a second. Okay. It's gonna do that to me? Come on. It's whining at me, Ira. It doesn't want to build. Hang on a second. Here, let me try it again. Let me start off with a daily. Okay. Now I can go out. Huh. Well, it just doesn't want to build out right now. I don't know what's going on with my system. Doesn't want to build. You there?
Yeah, I'm here. I'm
Oh,
listening.
okay. I didn't know whether I just blew everything up or not.
No, I'm here.
Let me try it the other way, see if it'll build.
Let me see if I can put it up.
I have so many of these spreads running, it just doesn't like it half the time.
Okay, it builds out on mine. I got the monthly up. Interesting that they bottom together.
Yeah, it won't go back. Mine won't go back build past May right now.
Okay, I got it. Mine is
Here,
working.
you know what? Maybe I'm using the wrong platinum. That's what the problem is.
Yeah, you got to use October.
Huh. Oh, that's another problem. Now I can get it. I had a daily up. I didn't have a continuation chart. I wouldn't pull it.
Yeah.
All right, let me see if I can get to the semi-annual here. All right. And you had a big, platinum had a big move this year.
Yeah. Yep. Got crushed.
Yeah, and it's holding right here on the oscillator, which is good. All right, so I have platinum up first. You want it second, or which way do you have yours?
It doesn't matter. But let me enhance here. Okay, I can see it.
Yeah, Jeff, you're right. Yeah, and the currencies are picking up a little bit.
Yeah, what they got work to do today. But as I said, if they can close higher today, then this is the first time they tried to wash them out with the equity, and it didn't happen. So, and I think the euro is having a little problems because there's big unwinding of the euro sterling. people were putting that on because they accepted narrative as Angelo talked about narratives yesterday, which is very important. The narrative of the anti-Brexit crowd, which is led by the FT, because the FT is the biggest cheerleader of the Remain, and they're Europhiles to the unthinking Europhiles, I'll call them, because they're in the pockets of those who have so much money at stake in Europe. And that's not conspiratorial, by the way. Just read it and read it critically. And you could see it. So we'll see what happens. I still say, and we almost got a rally in the end yesterday, worthy, but it died in its tracks.
Yeah, right at the quarterly pivot. I got to see it underneath that for it to go.
Yeah, I went, yeah, absolutely. Listen, again, it honored everything that we talked about from the euro to the yen. Absolutely. And as I said, I got out and I started buying some back later. But it's proven itself over and over and over again. So I'm not, it's validated itself. So now I know that, and all there is pressure building up. So if you get that weekly settlement above there, I think we'll get a nice move. And again, I'm bearish the dollar.
It should go just over 116 initially on a swing count, and then we got higher stuff. So
yeah, and they tried to put it away, but you know what? And then if you look at the European sovereign debt markets, look at the Italian is up, so the spreads are compressing a little bit again. Not a lot, just a little bit. So the fact that there was still a bid to the Italian, Italian really didn't break much at all. Said that some people weren't really concerned. But I think that people are waking up to the idea that people are building their own synthetic euro bonds, because it's not hard to do. I can take a little of this, a little of that, a little of this. I don't even need the German. And I can make this work, and I can get a higher yield than I can on the US 10-year, and I'm in euros. So what can I tell you?
yeah, and the Italians are still chugging away.
Mm-hmm.
And the Oats, they backed off a little bit, but they're right back into support too. And the Bonos are just knocking on the 200-day again.
You know what? With the U.S. 10-year sticking at 68 basis points or so, where are you going? Everybody's out shopping for something. All right, I just wanted to stop in, see, as they say, see what condition my condition was in. But Judd, see if you can reach out to Brian. I sent you his piece. So you might be able to find your way to him and invite him in to take a look, because he's done these before. And he actually, huh?
Yeah, I'd like to. I'll send him a note. Ask him if he wants, and invite him to come in.
Yeah, yeah. He's got a lot of experience. You should have a little chat with him. He has a lot of experience with it.
Okay.
Okay. All right. You can, just send me any questions that develop. But Pete, that's a good point, and we'll keep our eye on that platinum. Platinum really has been the dominant metal early today. Even with the equity market down, which it had correlated itself out for a while, but things change, which is what we get paid to notice.
All right.
And you see, the Swiss numbers came out from the Swiss National Bank holdings. I don't know.
I didn't see those. How big were their holdings and everything? Bigger and bigger and bigger?
They increased. Okay, hold on. Nice. That's a very nice sound there. Hold on.
Well, I can only imagine.
You think you can imagine?
All I've been doing is buying Apple, Microsoft, Amazon, Google, and Facebook.
Okay, so they increased For the last reporting period, last month, they increased, 33 billion for the month.
Whoa.
33 billion to foreign currency. And that's with very little movement to gold because they rebalanced the gold and everything. 33 billion. From 817 to 850, 850 billion. So they were busy intervening. But if you look at let's look at what the Swiss did for that period.
The
So
Swiss
here,
is,
let's
the
look at
Swiss
the
is
chart on the
higher.
graph. Yeah, so you want to see, and they still couldn't stop it. So why am I bullish the dollar? Explain to me, please.
Yeah, I mean, this thing wants to go back to the March low.
Oh God, that's
That's
it'll
for
drive
just
them crazy. But if the euro's doing it too, then they don't care. They'll have to live with it. As long as it's just not them against everything.
Yeah, and this is another pattern that's gone sideways for 5 years.
Yeah. Well, yeah, it's been kind of tough to, you know, that's a battle. But we should measure it always against the January 15th. Let's see, I'm putting it up right now. So January 15th, we closed at 85.88. And then I always go back and look at the next closes. So the following week was 88.03. I'm looking at the closes. 92 basically the week after. And if we look at a monthly,
Yeah, I'm on a quarterly right now.
okay, I'm on the monthly. So 92 even was where January closed at basically. And then the next one was, lo and behold, 95.40. So we are already under the following month of 2015 with that massive move. So if we did we close last month under there? We did. So, wow, it's doing a lot of work down here. Doing a lot of work. So please, Goldman, tell me why I should be bullish the dollar. Oh, you finally shifted. But when you look at the Swiss chart, it's really hard to say, wow, I want to be bullish the dollar. And there's a central bank who knows how to print money and do something with it.
Yeah.
If I was Jay Powell, I would be reading and following that very closely. I know it runs afoul of the Federal Reserve Act 13.3, but I'd be paying attention.
Yeah, well, it's, Bank Negara and the Swiss National Bank. They're the only two that have ever done a great job of it.
Bank Negara, there's not 2 people in the world. Well, there's not 10 people in the world who know what Bank Negara. There's copper making new highs for the day.
Yeah, and copper's going down too. Just going to go to the next level.
All right. See you, gents. I'm out of here.
Oh, yeah. Well, I got one question here from Ezra. He wants to know, he's trying to understand the fundamentals behind the yen below 107.15. Basically, I said that would confirm more stimulus, more money coming in, weaker dollar, the whole thing.
Well, yeah, it's just, Ezra, the fundamentals really don't change. Now, the Bank of Japan hasn't had to print as much money as they talk about, just like the Fed says, well, they're jawboning. So they haven't had to actually intervene as much because they have the market so badly off balance, the market does it for them. So, but the fundamentals per se, they're not really that much different. But I'll tell you what, at 0 interest rates, I get if I'm Japanese, I get a better return on my money leaving it in Japan because Japan really has no inflation. So the real effective yield, to me, that's the key fundamental. The real effective yield is higher for Japanese citizens in Japan, and with Europe at negative too. So I just think the fundamental driver is that money will just stay home. There's really not much place to chase. And it hasn't been confirmed because there is, there is no panic in the world. The Japanese aren't bringing money home. They're looking for opportunities around the world too, like everybody else. But what's the fun? Let me reverse that question. What's the fundamental attraction for the dollar? I'm asking Ezra back that question.
So I guess the fundamental attraction is that everyone assumes the U.S. will always pay their bills.
Yeah, but so will Japan. They have the same printing press as the U.S. does. I mean, because that's the argument you're making is that, oh, they have a printing press, so I'll always get paid in dollars. What the value of those dollars will be dependent upon the responsible policies or irresponsible policies, which will set the standards. But the Japanese, they still have a printing press. They haven't given over control of their currency to anybody else. So, I'm not trying to confuse you. I'm just trying to make the point as to why because you're looking for the fundamental answer. And the only fundamental answer I can give you is that on a real yield, okay, not nominal, but real yield, for a Japanese citizen, you get better yields in Japan than you do in the US.
Okay. Thank you, Ira.
Now, Ezra, let me also add one more thing there, because people, and I'm not a bottom-up stock picker in Japan. I'm a global guy. I think top-down, if that makes sense to you. But there are people who are analyzing the Japanese equity markets. And of course, there's nothing that's underperformed over the last 21 years or 31 years already in the Japanese equity market. But Japanese corporations are sitting on massive amounts of cash. They have been building up they've got fortress balance sheets. So, but their governance structures are terrible, which keeps a lot of people away from the Japanese investors. But that's what I'm considering. And believe me, you look at a yen chart, it just has not gotten the job done. So your question was right, under 107.15, because that's Judd's number. I'll look at it in a little bigger way. But I mean, again, what makes currency trading so difficult is there are so many variables involved, because you may be doing multiple countries. So, but tell me, what is the ultimate love of the US dollar here? Let's have this conversation. I'll give this conversation 10 minutes, but what's the ultimate love of the dollar?
I guess historically, it's been because of the reserve currency, and that at least globally, most people view the dollar as having more value than other countries' money, particularly in emerging markets, third world nations, and so forth.
I agree with everything you said, but we've also seen euro at 160, okay? And we've seen the yen for a long time at 75 to 80 yen to the dollar. So it's not like, the dollar isn't always strong. The dollar is not always loved. There are fundamentals that will drive it. But right now, you're 100% right. The driving of it has been, especially because of what was deemed a dollar shortage, especially in the emerging markets, because the dollar is a reserve currency. So trade and so many debt issues take place in it that when there was a shortage of dollars, people were running to secure them. I'm not sure that, I'm sure that it doesn't exist because the Fed, by its own work on the swap lines, have said, a lot of them have been paid down and people are kind of sitting there and not, partaking of them. So that tells me that the shortages for the short term has been relieved. But if the fundamentals were so good for the dollar, then why is gold so high?
Right.
I'm not being a wise guy. You know what? These rooms that we delve into Socratic method, we will actually, because your question is a good question, we have to ferret out why this is a possible trade. That's all this is meant for. Because You raise an issue, I'll raise one back to you. And the common narrative is, well, rule of law. But we've seen the dollar a lot lower, right?
Yes.
So there are things that can push the dollar a lot lower. And I think the United States, regardless of what Trump says, there are people in this country who would really like to see a lower dollar. First of all, because it would help the world a lot. If you want to ease the debt burden of the emerging markets, if the dollar were to weaken here, it would really aid and abet them, which would help the global economy. Because there's a piece today in the FT by a guy who I like a lot, who's at the University of Chicago, Raghuram, who ran the Indian Bank for a while, but is a very good thinker. And he talks about it, what's plaguing the emerging markets. And if the emerging markets are being plagued, the global economy is not going anywhere.
Okay.
Listen, Judd will tell you, and anybody who's followed me for a long time, I am typically early because I do a lot of research and to get to a viewpoint. And I think the euro has been really, really good. And again, this pivot area, here we are. We're back in.
Yeah, and this morning too, Ezra, when I was looking at, the only thing that really caught my eye this morning was the Aussie down into this area. I didn't think it was going to follow through to the downside. I thought that was just a reaction off of some China news last night and a little risk off. And I was just looking at it as a reflation trade.
Don't forget the Reserve Bank of Australia met last night.
Oh, yeah?
And it was the dovish comment from Lowe. So very, very, that they're going to stay, or you can go read it, the release, it's 5 paragraphs, and they actually, it's very easy readable, but they talk about they're going to stay easy because, again, they're following right in the Fed's language, which irritates the crap out of me. Because why should all the central banks speak the same language? And they talk about the jobs, until jobs return, because they've lost 800,000 jobs. He puts that in there.
Well, they just shut down Melbourne again.
Yeah, they shut down Melbourne this morning. And yet the Aussie's back to unchanged.
Yeah, and that's why I didn't want to get anybody sucked into thinking that the equities were going to break anywhere, because I like the look of the Aussie down there.
Yeah.
And you don't have to trade the currencies all the time. I just extrapolated it to what I thought was going to happen in the indices.
Yeah, no, and you saw it happen because they did try to put the euro. Listen, the euro's had a 75-point range, and but let's see where it closes. Again, we're Tuesday, so let's see what happens. And that's coming off. Don't forget the dollar's weakened, coming off a very good, for what it's worth, because I'm not data conscious right now. Unemployment number last week. So it's interesting that the dollar is weakening into that, in my opinion.
Yeah,
so I hope that gives you something, Ezra.
No, that gives me a lot. I did have a follow-up question regarding the yen, since you mentioned the Japanese companies are sitting on a lot of cash.
Yeah.
From that, I could kind of infer that they could tolerate a weaker yen, at least temporarily. Would that not be correct?
A weaker yen or a stronger yen?
A weaker one. And I say that because of this. I would imagine they want a strong yen, but not too strong, because they don't want stuff expensive. They want people to buy their stuff. But if they're sitting on cash and the US dollar and yen are getting weak, I would imagine they don't want it too weak, right? But they could also sit on it a bit to, like, what is their tolerance level? Is it going to go down to like 106 and it's going to sit there, or is it going to start retesting down to the March levels?
Okay.
Like, I'm just trying to see, like, so just going with the thought that, like, if yen and US dollar go down, then metals go up, equities go up. But at what's the tolerance threshold for Japan, and at what point would that trade be exhausted and stuff? I'm trying to look at the price levels right here. Yeah, there we go. I see Judd's got the chart up. So
yeah, and I have mine up too. So let me tell you, don't get too deep into that at this point, because if I put up Judd, what's the 200-month moving average in the end?
It is 104.
Yeah.
Okay. All right. So you see where we're really at, nowhere. And if I take you back to October of 2012, which, by the way, I had written a blog after a G7 meeting saying that the yen was going to weaken because of the language that the G7 was going to allow the Japanese to weaken the yen. Right now, the Japanese do not have that luxury. The world, you know what? The Swiss intervene, the Europeans do what they do, the Japanese can do with monetary policy, but there can be no effort by the Japanese to actually try to weaken the currency. The world would not tolerate it because that would be a trade issue. With the dollar weakening, that's different. And that's what a lot of the articles that I read don't comprehend, because the dollar is more than just a trade issue. It's right now a finance issue, and you have an issue of global finance, not trade right now. Only the emerging markets are a trade issue. But the Japanese, if they were to try to, they cannot set out to intentionally weaken the yen because the world would jump down their throats. They would not want them making an aggressive attempt. So the Japanese can absorb some. And don't forget, the yen, with all the Japanese investment, the Japanese have massive amounts of investment around the world, more than anybody else, more than the Norwegian sovereign fund, I guarantee you, because they've invested in factories. They hollowed out the Japanese industrial sector with the yen. When you go look at the yen sitting at an incredibly high level for years, they were forced to. So they don't really have to worry about that at this time. So I think they have a benign neglect right now. They're really more concerned about how to get the domestic economy up and running far more than, and it's not going to be by trade, because first of all, they've moved a lot of production to South Korea, Taiwan, and China, of course. So it's not the same situation as it was in the 70s and 80s and even early 90s for the Japanese. So we got to be careful here with that analysis.
Gotcha.
Okay, so I hope that clears some up.
Yes, thank you.
You're welcome. Anything else before I?
No, it looks pretty good.
All right, let's see the way these currencies spin out of here. I mean, the gold's done its work today, but let's see what these currencies do. And look at, you see the algos. As soon as the S&Ps had gotten a little higher, the euro rallied, the S&Ps dropped 5 handles. That's all algorithm driven. I mean, you can see it. Go ahead, match. It's a match for match.
Yeah, it's the same trade right now.
Yeah. All right.
Okay. Well,
All right.
thanks.
Okay. Bye.